Bitcoin, the mighty king of crypto, has literally made millionaires overnight. What if I told you that, instead of making you rich, it could leave you broke overnight? One mistake and boom, your entire investment could vanish. And the worst part? Most investors don't even see it coming. In today's video, we are exposing the biggest Bitcoin traps that can wipe out your savings in seconds. From market manipulation to security risks, we're going to break down exactly how investors lose money and the smartest ways to protect your money before it's too late. Most investors make critical mistakes that cost them everything. So stick around till the end because, trust me, you don't want to miss out on the right strategy to differentiate between stacking wealth and watching your investment disappear. Time to stop believing everything you see on the internet because let's be honest, Bitcoin is everywhere. With these TikTok gurus flexing their crypto gains and YouTube guys screaming, "Buy the dip!" You might find your way into this digital gold rush. But before that, know that this is why Bitcoin can wreck your finances. First up, Bitcoin's price is wilder than a reality TV show reunion. One day, it's soaring past $60,000, and the next, it's nosediving to half of that. And guess what? These swings are not even based on solid fundamentals like company earnings or economic growth, unlike traditional assets such as stocks, bonds, or real estate, which experience relatively stable price movements over time. Bitcoin as a cryptocurrency has seen drastic swings in its value over the years. Sometimes all it takes is an Elon Musk tweet or a regulatory rumor to send Bitcoin tumbling. This volatility is usually due to the speculative nature of the market. Many investors have entered the Bitcoin world with the hope of making quick profits rather than holding assets for long-term value. But because the market is heavily influenced by retail investors, it has fallen victim to sudden booms and crashes. Bitcoin is one of those few cryptocurrencies that has reached significant levels of valuation, but the majority of altcoins remain relatively small and can be easily manipulated by large holders. They can literally create artificial demand and cause bright fluctuation so that they can destabilize the market. So if you feel like you don't have the stomach for these chaotic price swings, Bitcoin might not be the magic machine you think it is. And if you think you can time the market, well, good luck with that, because even the experts get it wrong. That's Bitcoin for you. Every Bitcoin fan loves to say that it's the new gold. Let me break it down for you. Gold actually has physical uses: jewelry, electronics, possessions, you name it. But Bitcoin? It's literally just a computer code. It does not generate cash flow, it does not pay dividends, and it doesn't even have any use outside of speculation. The value exists only because people believe in it. And if that belief wavers, your investment evaporates. This lack of intrinsic value has raised many concerns about Bitcoin's long-term sustainability and viability as any investment. Almost every other investment has some sort of physical benefit. For instance, gold has instant value because it has various uses across many industries. Stocks represent ownership in a company with potential for profit. But Bitcoin as a cryptocurrency literally exists solely as a digital asset that derives its worth from what people are willing to pay for it. Often hailed as digital gold, Bitcoin is limited in supply. That makes it theoretically scarce and valuable. But this is real life. Scarcity alone does not equate to intrinsic worth. All it would take is for people to lose faith in Bitcoin's utility for the price to plummet immediately. The only reason you can make money from Bitcoin is if someone else buys it from you at a higher price. Doesn't that sound like a classic example of the greater fool theory? And what if you're the last fool standing? That's when things can get ugly. Let's switch up the good old saying a little bit. With great hype comes great scammers. Fake crypto exchanges, Ponzi schemes, rug pulls. People have lost literally billions falling for scams in the crypto space. And even if you're not getting scammed, you're still at risk of losing access to your own Bitcoin. Unlike traditional financial systems, which have robust regulations and consumer protections, the decentralized nature of Bitcoin makes it a prime target for fraudsters, hackers, and malicious actors. One of the most common scams the crypto industry has seen is the rug pull. This is basically when developers promote a new cryptocurrency project, attract investors, and suddenly withdraw all their funds, leaving investors with worthless tokens. Hackers are also a major concern. Cryptocurrency exchanges, wallets, and decentralized finance platforms have been frequent targets of cyber attacks, resulting in billions of dollars in stolen assets. There are also Ponzi schemes, where scammers promise high returns on investments but rely on new deposits to pay off existing investors. So when the scheme collapses, it leaves many with devastating losses. Could you imagine waking up to find your entire portfolio vanished overnight like a Snapchat message because of the exchange you used? Unlike banks, there is no federal deposit insurance for crypto. If it's gone, it's gone. And you know who's not getting scammed? The scammers. They're just getting rich off of your FOMO. Do you know what one of Bitcoin's biggest selling points is? It's the supposed anonymity. In reality, it's not as untraceable as you think. Authorities have already cracked down on illegal Bitcoin transactions, tracking down criminals who thought they were safe. So if you were planning on using Bitcoin for privacy reasons, you should probably think again. Cryptocurrencies are often promoted as a means of financial freedom and autonomy. However, while decentralization allows for transactions without intermediaries, users still have to rely on third parties such as exchanges and wallets. For instance, most crypto users depend on centralized exchanges to buy, sell, and store assets. While convenient, these platforms are vulnerable to hacking, regulatory intervention, and internal mismanagement. If an exchange that you have invested in collapses, you will literally lose access to your funds instantly. On top of that, network congestion, gas fees, and reliance on mining pools further complicate the idea of complete autonomy. True financial independence requires a lot more than just avoiding banks. It needs a system that is efficient, secure, and widely accepted. And if you're trying to use Bitcoin for some shady activities, just think about the fact that if the feds can track down cybercriminals hiding on the dark web, they can definitely track your transactions too. So maybe it's best if you don't use Bitcoin to do anything shady. Now, I don't know what you've heard, but governments are not fans of Bitcoin messing with their money systems. Countries like China have already banned Bitcoin mining, and regulators worldwide are tightening rules on crypto trading. If laws shift overnight, you could find yourself stuck with an asset that is illegal or difficult to trade. And it's not just China. Governments around the world have been increasingly cracking down on cryptocurrency, posing a significant threat to the industry. These regulations can limit access, impose taxation, and ban these activities outright, creating uncertainty for you. Many governments view cryptocurrencies as a risk to financial stability, investor protection, and crime prevention. While the United States and European governments continue to introduce stricter regulations, they are at least letting their citizens invest in cryptocurrencies. However, compliance costs and restrictions are slowing down the industry's growth. This very same threat of regulation can even lead to market crashes. So until clear and fair regulations are established, regulatory crackdowns will remain a major risk for the future of cryptocurrencies. The truth is that governments love control, and Bitcoin, it threatens that. Trust me when I say that these governments are not just going to sit back and let that happen. If you think that governments won't strike back, just wait. It's only a matter of time. Investment is a pretty risky area, and cryptocurrency is an even riskier area. So if you invest in Bitcoin the wrong way, it could actually make you poor. And I'm pretty sure none of you want that. So make sure to weigh all of your options before stepping into this world. Bitcoin is way too powerful, so make sure to play it smart. Don't let Bitcoin make you poorer. If you found this video helpful, hit that like button and make sure to subscribe to our channel so that you can keep your money growing, not shrinking. Subscribe now. See you in the next video.